Well, inflation continues to be stubborn. Today, after holding tight since January, the Bank of Canada pressed play on its fight against inflation, and it increased its interest rate by another 0.25%. This marks a full 4.5% increase since it began raising rates just over a year ago. What this does is it brings a typical variable rate mortgage holder up to about 6% interest. And for many of you, if you hold a variable rate mortgage, that means your payment's going to increase once again. Globally, inflation continues, but it's slowing down a bit. Prices of many things are still higher than really they should be. Here in Canada, after several months of declining inflation since October of last year, April saw a small uptick in inflation, which combined with the GDP and employment numbers that have recently come out, it has both the Bank of Canada and economists concerned. Bond markets have already anticipated this increase, and since a low point at the end of March, we have seen that the bond rates have increased nearly a full percentage point, and we find ourselves nearly at the same peak that we saw last year in October. Fixed mortgage rates have been increasing over the past month, and most banks are above 5% for a 5-year fixed rate, and those that are below 5% might not be there for long. In Canada, the economy did better than expected in the first quarter of the year. The total value of all things that we produced and bought is called the GDP. It went up by an annualized rate of 3.1%. This is still higher than at any time in the 20 years before the start of COVID. People are spending more money, and it wasn't just in one area, though. Demand for services like going to a hair salon or a restaurant, they started to go up. Purchases of big-ticket items like houses and vehicles have also been increasing. Anyone trying to purchase a home in Calgary in the last few months has experienced a very hot real estate market. In Calgary, the volume of home sales is only down by about 9% from where it was a year ago. But with really low inventory, we are seeing that the average prices of homes in duplexes and townhomes are all up about 11% over the last year. Condo apartments, they're up about 6% over the same period. For those of you fortunate enough to be looking for homes in Edmonton, it remains one of the most affordable major housing markets in Canada and arguably in the world. Home prices are basically the same as they were a year ago for both houses and for duplexes, but in houses and duplexes, they're increasing month over month. Meanwhile, townhouses and condos, they're down from both a year ago as well as from April of this year, so month over month. Part of this also is unemployment. It's hovering at about 5%, and that's really the lowest level that we've seen in the past 50 years. So that's quite low. So let's talk about prices. In April, the prices for many things went up. It was the first increase in inflation since October of last year. Even though energy prices went down that month, the prices for goods like food and clothes, for services like the haircut, personal training, also went up. And that's because people wanted those services, and there's just not enough people to provide them. The Bank of Canada expects, though, that prices will go down a bit in the summer as energy costs get cheaper and as last year's price increases start to slow down. So we're not fighting against that as well. But there's still concern that prices will stay higher than they were obviously a few years ago and higher than we really want them to be for the next good while. And this really is some of the why behind the Bank of Canada's announcement and its decision to increase its interest rate yet again. I'm hopeful that by them doing it now instead of waiting until a little bit later, they might have nipped this bit of increased inflation in the bud and we can start to see rates stabilize. And the major banks are still forecasting that around the end of the year, early part of 2023, the Bank of Canada is going to start lowering its interest rate. The hope here by the Bank of Canada, of course, is that it's going to be a little bit harder for people and for businesses to borrow more money because there's just too much demand for things. And so they want to make sure prices stay stable and just don't get too high. In addition to raising its interest rate, the Bank of Canada is reducing the amount of money in circulation. They do this through something called quantitative tightening. That's where the the bank has stopped buying bonds. They stopped that about a year ago, and they're not buying any new ones when the existing bonds that they have mature. So the bank's going to continue to monitor everything and make sure that it's going according to plan and that prices start to remain steady. So to summarize, the fight against inflation, it's not over yet, but we can still be optimistic that it almost is. As the increases in 2022 are further into the past, then the year-over-year numbers will decline if we keep things under control. I know that this is unsettling, and if you're concerned about your own situation or you want to discuss it specifically, please reach out to my team, and we are all happy to help. Thank you.